credit inquiries, how it affects our credit, what we can do, shopping, all these type of things. I had a customer who, they came into contract on a property, and essentially, they're not happy with the lender. Unfortunately, that happens often in this industry. And, they're basically not wanting to deal with the lender anymore, wondering how a new credit pull, because when you go to a new lender, they're going to have to re-pull your credit, all these type of things. And, and the clients are wondering, how does that affect them? So I wanted to put it out there just so we know when it comes to credit inquiries, okay? When it comes to credit inquiries and how it affects your score. So the credit bureaus implemented a new system. I don't know when it was several years ago, that allows you to now shop, okay? So what that means is that when you are looking for a mortgage, you can have your credit pulled, and you take you have an initial so-called hit. It's not going to be many points, but you are going to get a little deduction just for the initial hard inquiry, right? However, after you've had that, they allow you to shop with other mortgage lenders. This applies to every industry. So if you're looking for a car, other auto loan inquiries are not going to now keep deducting off of your credit. So what that means is that as a mortgage, when you apply for one mortgage, you have 30 days to shop. So what that means is within 30 days, you can have 10, 20, 30 mortgage lenders pull your credit, and you're only going to feel the effects from that initial inquiry. Now, are you going to have a hard inquiry? Yes, you are going to have a hard inquiry, because every time a mortgage lender pulls your credit, it is going to be considered a hard inquiry. So that, you are going to have that. But as far as the effects on your credit, you have 30 days to shop. So you can have multiple lenders pull your credit. You're within 30 days, and that is deemed as shopping. So what does that mean for you as the consumer? What that means is that you have got to start taking advantage of that. So that means that just because one mortgage lender pulled your credit does not mean you have to stay with them for fear that, hey, I don't want to go with someone else because then I have to go through another credit pull, and then I have to worry about that. So what I'm telling you is that it is within your right, and you need to definitely shop. I did a video a little while ago talking about how we got to interview the mortgage lender, the mortgage loan officer. Listen, this is going to be the biggest purchase of your life. You don't want to go with someone just because you're scared how it might affect your credit if someone else pulls it. So you want to make sure that you're aware of the laws, how it works. You're aware of the credit reporting system. You have 30 days to shop, which means you have other people that can pull your credit in the same industry, and you're not going to get that ding for another mortgage lender pulling your credit. So you got to take advantage of that. Go ahead and shop, and make sure that who you're dealing with is someone that you want to deal with, and someone who is going to be able to get you through the process. Because every transaction when it comes to purchasing may not be smooth. There's going to be certain things that happen. So that's why you want to make sure the mortgage loan expert that you're dealing with knows what they're doing, knows how to get you through the transaction. This is going to be the largest transaction you make. But overall, when it comes to shopping, you've got 30 days to shop. Okay? So just keep that in your mind, that it's not going to negatively affect you. When a mortgage lender pulls your credit, it's going to be the same as the previous lender. Scores are not going to change. All right? You might see 1 or 2 points, if that. Now, when it comes to credit inquiries, when it comes to credit, if we're talking about that with mortgages, we also have to address Credit Karma and address the algorithms that are going to be different. So even though Credit Karma gives you a credit score, okay? So keep in mind, Credit Karma is great for knowing what's on your credit, okay? But when you look on Credit Karma and you have a mortgage lender pull your credit, They are not going to be the same. So you want to prepare yourself, because it could be dramatic difference in the scores. The reason why is because it's all about the rating and the algorithm in which a lender is looking for versus Credit Karma. The other thing about Credit Karma is that they are not the direct source of the credit. So understand that they're only giving you a score based upon their algorithm, but they are not TransUnion, they're not Experian, they're not Equifax. When a lender pulls your credit, they are pulling it directly from Experian, Equifax, TransUnion. Okay, so you got to understand there's different FICO score models out there. So that's also why you're going to see a difference, when you're looking at Credit Karma, or people say, hey, I checked my bank and my bank says I have an 800. That's great. Your bank is not trying to lend you $500,000. So the rating is going to be a lot different if somebody is trying to loan you $500, $600, $1 million. So you got to imagine that, understand that, and keep that in mind. All right, so that was just a quick thing. I know that that comes up quite often in the mortgage industry. Wanted to explain that and go over that. All right, as always, make sure if you have any questions, leave a comment, hit like, subscribe. Always giving you guys information. Take care.